Okay, last topic, and I just started the tape. Jordan, do you mind hitting the lights on? Thanks. We have one more thing to cover. I've done a little bit of an intro to this, so hopefully we'll be able to spend our time working on this today. Cost of goods manufactured. Friday, all of your problems are due. Practice problem, and then the one that's due. Today we're going to be working on cost of goods manufactured. Friday, we're going to spend all day going over your practice problems and then the one that's due. The review is posted for the exam. The exam is Monday. I don't think there's anybody in this room before us. Can everybody get here by 8:45 or 8:45, excuse me, so that you have 75 minutes for the exam? Let's set you up in the academic support center then. Anybody that can't make it, go ahead and let me know and we'll set you up in the testing center for 75 minutes. Because it really is 60 minutes is really pushing it for this exam. Okay, what is the cost of goods manufactured? What am I talking about? Does anybody remember this discussion peripherally?
Your direct materials, direct labor.
It is. What, I mean, is it a new financial statement? What is it? Help me recreate, please, very quickly what my P&L looks like for a manufacturing firm. What's my top line? Sorry? Sales minus COGS equals everybody together, you guys. Gross profit minus operating expenses gives me operating income. And then there's all that other stuff takes you to net income, but we're not going to focus on that. Okay. What I'm doing here is my COGS looks a little different when I manufacture my product rather than purchase it, mark it up, and sell it, right? What does it look like? I think we did this late last week.
Beginning.
Yes, beginning balance what? What kind of inventory?
Direct material.
There's three kinds of inventory. What are they? Raw material, work in process, and finished goods. Beginning balance what? If it's ready to sell, it's got to be finished goods. Beginning balance, finished goods. Plus what? In a merchandising firm, it's plus purchases, but here it's plus, it's what I make, right? Yes, plus cost of goods manufactured. You've got this in your notes from sometime last week. So finished goods plus cost of goods manufactured gives me what? Not yet, because aren't I going to still maybe have some stuff in my warehouse?
Oh, you're ending it. Cost of goods available.
Yeah, what do I have available to sell? Cost of goods available to sell. Here's what I started with, here's what I made. That means this is what I've got available to sell, right? And from what I have available to sell, one of two things happens to it. It's either sitting in your inventory at the end of the period or it's sold, right? So if I subtract my ending balance, finished goods, what am I going to get? What I sold, right? What we're working on today, guys, is figuring this number. Cost of goods manufactured. Because in the merchandising company, we just bought it, no big deal. Now, we're manufacturing it. So what we prepare is called a schedule of cost of goods manufactured. So you start out with your three-pronged title. Schedule of cost of goods manufactured for month ending or for year ending or for quarter ending, 9/30/15. This is just for 1 month. So basically, what we're going to do, and I want to make sure that what I've got in my notes looks exactly like the book. Yeah. So what are the three things again? So let's set up our model. Then we're going to plug in numbers. What are the three costs that go in again to my my manufactured product?
Direct materials.
Mm-hmm.
Direct labor.
Yep.
And manufacturing overhead.
Yep. What kind of manufacturing overhead?
Applied.
Applied. So let's set up those three categories and leave quite a bit of space under direct materials because that's got more things to worry about than the direct labor and the overhead. So direct materials. And then go down quite a ways. So direct materials plus direct labor plus overhead equals my total manufacturing costs. Is this for just one job or for all my jobs? No, this is to do my financial statements, because where's that cost of goods manufactured number going again? Yeah, it's going in, it's a part of the model for COGS, right? So this is one number that I'm using to prepare my P&L at the end of the month. Total manufacturing cost. So is that the number that goes straight to cost of goods manufactured?
No.
No, you've got to add it to beginning with and subtract ending with. Because when you flip on the lights the morning of September 1st, you're probably going to have stuff in process from last month. And when you flip off the lights on 9/30, you're still going to have stuff in process that's going to carry to October. So plus beginning with minus ending with. And now we've got total cost of goods manufactured. The only thing we have to do now, did everybody get that? Is fill in the direct materials. And this is pretty straightforward. There's just one little quirk, so stick with me here. So direct materials, let me just back up. So raw materials inventory has what kinds of materials in it? It does have traceable, which is called direct. But like, what do we do when we buy the gaskets and the wood glue and all that stuff? Where does that go when we buy it? Yeah, I'm sorry? It goes into the storage room until it's requisitioned. What account does it go into until it's requisitioned? Raw materials inventory. So the answer to my question was, what's all in raw materials inventory? And the answer is everything. Direct materials and indirect materials. And they all sit in the warehouse until they're requisitioned onto the production line. Okay? So if I'm just trying to get direct materials here, can I just go straight to my raw materials account, or do I have to pull the indirect materials out? I have to pull the indirect materials out because my raw materials inventory is both. So the model is, and again, I just keep checking my notes because I want to make sure there's no discrepancy between what I'm showing you. Beginning balance, raw materials. Where do I get that number, by the way? Yeah, I just go to my last balance sheet, right? Where do I find it on my balance sheet?
Current
In your
assets.
current.
I look in my current asset section and it's sitting there from 8/31, right? It rolls over to beginning balance on 9/1. So then I'm probably also going to go do some what during the period? I'm going to purchase more, aren't I? And back to those segues, I'm going to get more fiberglass bodies, I'm going to get more gaskets, I'm going to get more O-rings. So I'm going to purchase some raw materials. And make sure somewhere in your notes that you're mindful that this is both direct and indirect. So here's what I started with in my raw materials account. Here's all the stuff I bought during the period. I throw that right into raw materials inventory as I buy it, right? And so then basically if you add those two things together, I've got what's available to use. And they call that total raw materials available. This model, by the way, looks exactly like COGS. It looks exactly like this big picture. What did I start with? What did I buy? What do I have available? So what do you think you're going to have to subtract from this to get the amount that you actually put into production?
The indirect.
Yes, the indirect, and also what?
Raw materials and
What do I have sitting there at the end of the period? Right? Here's what I have available to use. What's still sitting in the warehouse didn't get used, did it? Minus ending balance raw materials.
raw materials.
And minus, and somebody said this, my indirect materials, all of them? No.
Match on-
What was used during the period? What was requisitioned during the period? Put to manufacturing overhead or I'm rarely stumped. Indirect materials used in production. That's my, and somewhere make a little something so that you can see this. This is my little mini model for direct materials. You're going to have one number that comes out of that and goes flush right. And it's called direct materials. They don't even give that a title. So direct materials plus direct labor plus overhead. All this little mini model is going to go in here. Right? So whenever we have a schedule, and this is something you just learn how to do, your big numbers go to the right, and then if you have little mini schedules, those are in columns to the left. Go ahead.
Oh, you're.
No, go ahead.
I was just wondering what it, once you total that, then that's your cost of goods manufactured.
That's my materials used. Oh, I'm sorry. So you mean going down?
Yeah.
So direct materials,
No, under indirect material.
that the name of that, and they didn't give it a title, but I would call it direct materials used. Direct materials used plus direct labor plus applied overhead gives me total manufacturing cost plus beginning WIP minus ending WIP gives me cost of goods manufactured. Now, you've got your model. I'm going to, let's use, oh, and let me just make a point here. When you requisition Before we apply this model or do this model, I just want to make sure that we're all on the same page. If I said to you, what am I making? Give me something that I'm making. Computers. If I'm the production manager, and on 9/11, I requisition $8,500 worth of motherboards. And $296 worth of screws and cable. Make that journal entry. I'm the production manager. For HP, I've got a small run. I requisition $8,500 worth of motherboards and $296 worth of screws and cables. What's my journal entry? Just a sec, everybody, just write it down, please. Caleb, what'd you do? How many debits do you think you got? 2. How many credits? 1. What am I debiting the motherboards to?
WIP.
They're direct materials. They go straight into WIP, don't they? What about the screws and cables? Where do they go?
Manufacturing.
They're an example of indirect materials. It's an actual cost, and we know that actual overhead gets debited to overhead.
You're taking it out of raw materials.
Yeah, what's my credit? How many credits do I have? They're all in the same place. They're all sitting in this big account called raw materials inventory, which realistically has tons of little subsidiaries, because obviously you're not going to be balancing out one account if you've got 8,000 components. No, where did this materials come from? Yeah, it came out of my current asset account. It was all sitting in my raw materials inventory, wasn't it? I requisitioned it. Or another word is it was issued. The reason I wanted to go over that was to make the point when you're doing your cost of goods manufactured, raw materials and direct materials are not synonymous terms, are they? Anything that you pulled out of raw materials inventory, like this, that went in as a debit to manufacturing overhead, you've got to subtract that number where I told you to subtract that number. Right here, minus indirect materials in MOH. Yes.
So what if you were doing, like, you had raw materials and you were buying, let's say you ran out and you had to wait for them to come in. So would you do that differently?
When inventory comes into your office or into your shipping dock, it goes straight into raw materials inventory, and it can sit there for a long time if you don't have a production run, right? Okay, turn to page 111. And using what you just did for today, take the numbers off those T accounts and do your cost of goods manufactured. And then calculate COGS. So we can flip on the lights here. And please raise your hand and I'll come around and help you. So you've got the model all set up in your book, or in your notes, right? You've got all the numbers on those T accounts. So I want you to translate those numbers into your cost of goods manufactured. Does everyone understand what we're doing? I'm sorry, Jean? Not really. No. So on page 111, you have some T accounts, right? What do you do with those? Those are the balances. That's going no, you've already journalized them and posted them.
Oh,
These are the numbers at the end of the month, and now you have to prepare your schedule of cost of goods manufactured. You've got the model set up. Really, you're just pulling numbers, aren't you? So if you're listening to this at home, there's going to be about 10 minutes of silence. And then we'll put it up. Under materials, can you just look at the no, you've got another mini model. And that's the beginning of balance, raw materials, plus purchases, minus ending balance, raw materials. And honestly, raw materials. Now, we're telling you numbers. Where is your beginning balance raw materials?
oh, sorry, yes.
The beginning of the month. Try it together. And you're going to do your little mini schedule. Yep. How much did you purchase during the month? No, I think, yeah, the debits are make the raw materials go up and the credits make it go down. And then you would also be able to see that, because you saw here that you debited it, and it also be able to see that, because you can read raw materials. Right? Okay? This is what was, again, that was what was what? Requisition. So the beginning balance raw materials plus purchases. Oh, you're doing the model just like this. So it's, if you want to see a picture of what the numbers look like, it's on page 102. You're doing this little model right now. working on just like we just did, so minus ending balance raw materials, well, where are you gonna get that number? And then, yeah, exactly, and then minus the amount that is allocated to indirect materials, and you can probably get to read. Okay, so just follow the model down. No, I would, that would be pretty hard. I would probably tell you that it would be a for any of words. Who else needs a little help? Or a lot of help.
So,
Yeah. Okay. Yes, sir. Anytime that you see BAL, and if I wasn't sure about it, I can see that. But if I wasn't sure about that, I would go back and reread it. And it says, oh, they were purchased. Well, that's exactly what I thought. Good. Yeah? Beautiful. Again, balance, sure. And then we got one more thing. Okay, so minus indirect materials that went into manufacturing overhead. Well, go read B2. Yeah, exactly. Good. It's just a matter, you guys, you just have to go read the descriptions. I don't know that I would be looking at that. I'm not. Okay, good. Now, okay, so you're not quite there yet. So total raw materials available minus ending balance gives you, and you've got one more subtraction, so get rid of that line. The other thing is you guys use pencil. Always use pencil. Yeah, paint pen, not working. So, indirect materials used in production. Where the heck are you going to find that?
Rather than. Oh, wait. No, it's right there.
We just made the journal entry for indirect materials. What does it look like? You debit what and credit what? We just made a journal entry for when you requisition indirect materials, because a lot of people are stuck on this last number minus indirect materials and MOH. Yeah, you debited MOH and you credited raw materials. So I go look at my raw materials account and there's only one big credit. Well, I would go read the description then. Does that make sense? So go read the description for B and you're going to see exactly.
Your total is right there. Yep.
You have those?
Yep.
Okay, good. Now, how are you going to find your purchases? Look at your raw materials account.
Cost of goods sold and cost of goods manufactured. Come on.
Sorry. Look at your raw materials account and tell me where your purchases are. And how do you know that? If you're unsure, go read it. Right? Okay. So, now, where's your ending balance? You got your 50. Okay, great. Minus, what's the last thing? Indirect materials that went into manufacturing overhead. Where do you see that? In raw materials. Well, you better go read the description. Exactly. Right? Okay. So you just got to go kind of item by item and pull the numbers from the T accounts. No, you're doing great, but you're missing one of the other pieces is late. And it's so late. So tell me what the, where's your beginning balance? Your beginning balance raw materials is what? Really? That's your ending? Where's the beginning balance in a T account, you guys? First number that says BAL That came from the last month, right? The ending balance is at the bottom. The beginning balance, 20. But then the ending
No, that was my number for 20 instead of.
What's your amount for direct labor?
Oh, 360, okay.
Okay, that makes more sense.
75,000.
So what was your,
Purchases.
what was your direct materials?
All of your raw materials.
Is that what you're asking?
Yeah, your direct materials.
Yeah, that's your beginning balance.
Well,
Plus,
let's see here, I added this.
so go look at description A and tell me what that is.
60.
Hold on a second here. Okay, 360 plus the 75,000. And then applied manufacturing.
Yeah, that's what you purchased.
Which is 915,000.
Check.
Right, so let's just get one thing at a time. So beginning balance 20 plus. So you're following this model right up here. Beginning balance
Yeah, you're
plus
right.
purchases.
Then minus the 30, add the 15,000 and beginning with.
You've got to follow that.
Subtract the ending with the
And you've got to
30,000.
use those labels because you just got a bunch of numbers.
Well, I think I just did that. So I just, well, one I added wrong, so.
Just erase everything. So beginning balance 20 plus
Yeah, I
more
just
town
added
purchases
it.
gives you 430 of available.
Add the 15,000 ending with.
Oh, you know what? I didn't add that.
Minus two things. You got to
Add all
figure
three of them.
that's your ending balance.
30,000. You subtract it.
And then minus your indirect
Oh, good
material.
idea. Oh, well.
You've got a label on it. So I go over here and I say, oh my gosh, look at
What's your
all
total
the
for
other
direct materials?
How much of that is direct and how much of it is indirect? I would go read the
Direct
description.
materials, is 360. I got them at
Okay.
15.
So direct labor 75.
We got total,
So then you added 15.
subtracted 30.
Is 900.
915.
Right?
Oh, I did my math
Yeah,
wrong.
see, then that's what I did.
Minus
So you
20.
came up with 900.
You had to do that now.
Well, I kept getting the num lock in.
And if I question any of this, I just go, yeah, that's exactly right, that's where the supply. Beautiful. Okay, so that's cost of goods manufactured, right?
Yeah.
Now the next thing I wanted you to do is figure cost for me,
Oh, okay.
Oh, costs.
right?
Okay.
Good? And then a plus applied overhead. And I think you're gonna be best off on two if you label all these together, right? Once you get cost of goods manufactured, you're gonna move on to,
Cost of goods sold.
Yeah, 900,000.
okay, yeah, your cost of goods manufactured is 900 grand, and then you move on to costs. Excellent. That's the total of direct materials plus direct labor plus applied overhead.
Now she wants you to do cost of goods sold.
This 360 should be over there. I think it was 900.
900,000.
So let me just read you the numbers.
We both got 915,000.
We didn't subtract the,
Oh, I think you forgot, let me just go through it. So, beginning balance raw materials, 20 grand. Plus purchases, 410, gives me available 430. Is that the cost of what I put into production? No, because I've got some in ending inventory and some of that was indirect materials. So I subtract my ending balance, 50 grand, And then a lot of you struggle with, well, where do I get the indirect materials number? So I go to my raw materials account, and I see a credit for 380, and I'm like, God, that feels like a lot. So I go read the description for B.
And it says direct labor.
Yeah, and it splits it for us. So minus 20,000 of indirect materials. My direct materials used was how much again? 360. Plus direct labor. I'm going to go right to what account to find that? WIP. And I look and I know it's not B because that was materials. I just did that. C, I go read the description and it tells me, doesn't it? Direct labor 75,000. Plus applied overhead. Where the heck am I going to find that easily? What? Okay, and let's just say this. We should all be able to do this out of our heads. What's the journal entry when I apply overhead? I credit overhead and I debit.
Cost of goods sold.
When I'm applying overhead to a job, I debit WIP. What goes in WIP? Direct materials plus direct labor plus applied overhead. So I debit WIP and I credit overhead, and I can go look at my T accounts and I see there's a credit to overhead of 480, and oh boy, that's also the debit into WIP. And if I still wasn't sure enough, I would go read the description in I, and it says, yep, that's what was applied. So what were then my total manufacturing costs down here? How much were my total costs? Direct materials plus direct labor plus applied overhead? 915? Is that the end of the story? No, you've got to add beginning WIP and subtract ending WIP. And I'm going to pull those straight from the T accounts. Right? Cost of goods manufactured, 900,000. Is this schedule a formal financial statement? No, you did it all to do what? To throw it up in your COGS model. So do that and get me COGS. I'll give you a couple more minutes and then we'll wrap up the last 5. Go ahead. Let me take a look.
So it'd be overapplied, right? Yeah.
I would make the journal entry and then figure out whether you got a debit or a credit COGS, and that will guide you. Make the journal entry to close this out, and you'll see then whether you're going to be debiting or crediting COGS, and that'll help you figure out whether you should add or subtract it.
was on the balance when we started.
Well, my finished goods has a beginning balance. I'm sorry, I guess I'm not seeing what you mean. So I go to my finished goods account and there was a beginning balance, right?
When we started and did the journal entry.
Well, I'm just looking at my T account.
There's 30,000.
Oh, hold on a second.
Did I over or under apply my overhead if I have debits of 460 and credits of 480?
Over.
So I have to write it up every single stinking time. Actual and applied. I over applied, right?
You're gonna
So
finish
for
out
me, if I was going to finish this model, I would just give myself a little nudge by doing the journal entry, what I would be doing to close it. How would I close this account out? Am I debiting or crediting overhead?
debit.
I think I've got to debit it because it's got a credit balance of 20, doesn't it? So I think I have to debit it to close it, right? So I'm just going to do a little jog to my own self, and my credit would be to what?
Cost of goods sold.
COGS.
So since it's a credit, you're going to subtract it.
Yeah, I have to do this, honestly. This is not intuitive to me. So if I have a credit for 20 grand, do I add or subtract that to COGS?
Do you have an over applied? You subtract.
Just say to yourself, is this increase or decrease COGS to credit it?
Decrease.
Why? This is the debit type account. So
So 850,000.
here's what I would do if I were you. We have 2 minutes. Let's just go through what our strategy is between now and Friday, and then Friday and Monday. For Friday, you're doing some practice problems. And most of them, honestly, after the level of what we've been doing, are going to feel pretty easy, pretty simple.
Except for the homework.
3
Or I mean the one that's due.
3-11, you're going to have another chance to do one of these. All the solutions are posted, so you can, be working with them as you go through. Really, the practice problems, honestly, shouldn't take you a whole bunch longer than an hour. 318 is the one that's due. And this is essentially taking you through basically what we've been doing, which is going through all of your T accounts. What I would do with my T accounts immediately is always put your pluses and minuses and right above it what type of account it is. Current asset, expense, whatever. Okay? I'm available between now and Friday if you have any questions on P3-18. There's a pretty lengthy review posted. You may not need to do all of it, or you might need to do it twice. I don't know. And then for those of you that want even more help, I've got a supplementary problem that I'll post if you want to try one more try at one of these guys. Now, you also have to be realistic. I've got 75 minutes to test you. It's actually, prior classes have taken 60 minutes. Can I have you do all this, plus chapter 2 and chapter 1?
No.
I mean, so you've got to be sort of thoughtful. What have we focused on? We focused on chapter 1 and the difference between financial and managerial accounting. In chapter 2, we focused on what? Caleb's like, what? I don't remember chapter 2.
Period accounting.
The difference between direct and indirect labor and materials.
The difference isn't between how costs behave. Are they traceable or not? Are they variable or fixed? Why do we care if they're variable or fixed? Because we need to get what?
Accurate numbers.
Yes, we do. Yeah, but why? Yeah, but we practiced a new kind of income statement.
Contribution margin.
Yeah, we have to get contribution margin. And so if we have a mixed cost, we have to do what?
Divided between variable.
Break her down. That's basically what we focused on. So you can be pretty guaranteed. It's about 75% numbers, working problems, and like 25% multiple choice. So you can pretty much figure out what I'm going to give you the problems on. Okay.
Chapter 1 and 2 will be multiple.
And also, we talked about sunk differential and opportunity cost. So you should have a peek at that again. Okay. Breathe. I'll post this today. Take care. See you Friday.